appreciate everybody joining today, and thank you for submitting all your questions beforehand. We definitely did notice that there was a definitely a theme or two as it related to the questions that were submitted beforehand. So we're going to do our best to address all of those questions that had been submitted before and some of the information we're going to present to you right off the top. Please, if we don't cover something that you asked before, or if you think of another question while we're going through the material, please make sure that you're submitting the questions the way that Emily had stated right at the beginning. So as Emily said, my name is Kate Serpy, and I have taken the lead here at Wegner on some of the loan programs that are available to organizations during this time. So just briefly to go through the agenda that we have today, I'll be talking about the Paycheck Protection Program, as well as the Economic Injury Disaster Loan Program. Going to be talking a bit about the Families First Coronavirus Response Act, also known as the FFCRA. And Whitney's going to talk a little bit about the employee retention credit and some of the payroll tax deferral options, and we'll open it up to a live Q&A. So with that, I'll start talking about the Payroll Protection Program. We had a lot of questions come in, a lot of them around the loan forgiveness, so I'm going to get to that. But first, we'd like to maybe start off with a poll question. We'd like to know how many people have actually applied for the PPP loans. So I think Emily's going to put a polling question up. And if you can, it should have popped up on your screen. If you can go ahead and answer that. And I'll kind of base some of the items that I'm going to go over off of how folks answer this question. We found that people are starting to receive funds if you had applied for the PPP loan right away. We have people that applied and have been approved and are just waiting for funds. Some people that have applied and haven't heard back yet. A lot of people that are still deciding if this is the right program for them. And then some people aren't familiar with the program quite yet. So it looks like at this point, about 42% of the people on the phone right now have been approved but are waiting for funds to be dispersed. 22% have applied but haven't been approved yet. 13%, we've got 8 people that have already received their funds, so that's great to hear. That's very exciting. And about 23% that are still deciding. So hopefully we'll be able to give you a little bit more information today to help you make that decision. Glad to see that nobody responded, what is PPP? That's good to hear. So I'm not going to go into too much detail, excuse me, over what the PPP is. Obviously, if most people have either applied for it and are just waiting or received funds, or if you're still deciding, you likely have a pretty good idea of what the program is. So I'm going to go over just at a high level, just a few of the details, and then start answering some of the questions that folks had submitted. So we did have some questions about the funding. At this point in time, there has not been additional funding allocated to the Paycheck Protection Program or any other programs as it relates to the CARES Act that was signed into law. So funds were limited in the CARES Act to $349 billion. I saw some information that as of 4/12, which was Sunday, $205 billion of that $349 billion had been appropriated already. So as you can see, more than half of the funding is gone. I would expect that in the next week or two, the likelihood is that $349 billion will likely be exhausted. So if you are still deciding, I would make a decision probably by today and at least get the loan application filled out and submitted to your banker, because the funds aren't going to last much longer. In addition, starting last Friday, self-employed and independent contractors were eligible to start applying. So that means the pool opened up to even more people to be vying for these funds. So if you are still deciding, I would go ahead and try to make a decision sooner rather than later. So most of you probably already know based on the answers to the questions, but to be able to apply, you need to apply through an SBA approved lender. So the best way to find out if the bank that you're currently working with is an SBA approved lender is to talk to your banker. That's what we advise all clients to do right off the bat, was to contact their bank and make sure that they already had a relationship with an SBA approved lender. I know last week, more lenders have applied to be SBA lenders. It is an application process, so it has to be approved, but they have been working to get more lenders available so that more organizations can apply if they didn't already have a relationship. So let's go ahead and talk a little bit about eligible costs. For those that have already received the funds, you likely, or have already applied, you went through the calculation and hopefully have an understanding of the eligible costs, but I'd like to go through them quickly just to make sure everybody has a clear understanding. The eligible costs for the Paycheck Protection Program fall into two categories. The main point of this program was to help organizations retain and or rehire their workforce. So the main purpose of this loan, the funding, is to cover payroll costs over an 8-week period. Those payroll costs do not include mileage reimbursements. They include the gross salary that you pay to your employees. So that's salaries, wages, tips, commission. Excuse me, it can also cover vacation, PTO, or sick leave. Sick leave that is not already covered under the FFCRA, which Dan will talk a little bit about later. You can't double dip into any of these programs, so that's something we'll talk about towards the end, what you can and can't do if you're applying for or using a number of these different programs. But the payroll costs include the gross salary. It also includes employer portion of health insurance premiums, the contributions to the employer contributions to retirement plans. So if you have for example, a 3% match on your 401k program, that 3% match is covered. You can use the funds to pay for that. It also includes employer paid state and local taxes. So for most people, that's going to be the state unemployment that you pay. It does not include the employer portion of Social Security and Medicare, also known as FICA. So you cannot use the PPP funds to cover the 7.65% that the employer has to pay for Social Security and Medicare. The gross salary portion covers the employees. The non-payroll costs that are covered are rent, utilities, and interest on mortgage obligations. So that rent is defined as rent on a lease obligation, typically for like a workspace or an office. It's not intended for rent if you rent equipment. It's rent specific to leasing office space, or if you have a warehouse, that type of rent. So since many of you have applied, some have received funds, many are just waiting for funds, we did get a lot of questions as it relates to tracking those costs. So we are accountants, so we always tell people to document, but we couldn't mean it more in these times. For the purposes of the PPP, tracking your costs is going to be essential to guarantee any type of loan forgiveness. Excuse me. Now, obviously, we aren't a bank, we aren't a lender, so we aren't the ones responsible for calculating the loan forgiveness or determining what support you're going to need to provide the bank to determine how much of the loan is going to be forgivable. However, we can give you some guidance based on some of the loan forgiveness calculators we have seen and based on some of the supporting documentation requests we have seen come from banks so far. So as a reminder, excuse me, document. I'll say it a number of times because it's so very important. Any way you can document and track the costs that you're using these PPP funds for is going to go towards your benefit. I would say you want to be more documentation is better than less. So anything you can do to track these costs is going to be helpful. One of the things that we have recommended, if possible, keeping these funds in a separate bank account. Ideally, that's going to be the best way to track the costs because you can use it as what we would call a clearing account. So if you have payroll that's going to come out of your bank account tomorrow, let's say the gross payroll, so gross, not net, the gross payroll is covered. Your gross payroll to your employees, so that's before all of the taxes and everything come out, is $100,000. Maybe $60,000 is going to come out of your bank account tomorrow to pay your employees. But that $100,000 is what's covered by the PPP funds. If you have that money sitting in another bank account, you can just transfer the total gross payroll to your operating checking account when that payroll comes out of the bank. This way, you've got an in and an out. You know exactly what those funds are being used for, and you're going to have a payroll register as documentation to show how you use those funds. The same would go for your group health insurance premiums. You can pay that group health insurance premium, you know what the employer portion is of that health insurance premium, and you can transfer money from your PPP funds account into your general operating account. If you can't do that for some reason, if you need to deposit the PPP funds into your main operating account, this is where you're going to want to make sure that you're documenting in your accounting system. Hopefully everybody has an accounting system. If you're using spreadsheets to track it, you're making highlights, you're making notes, and you're keeping every payroll report and every invoice. If you're paying for rent or if you're paying for utilities, you're making sure that you keep a copy of every single invoice and track those as you pay them. So the funds are based on a cash basis. So when that 8-week period starts, which I'll talk about in just a second, when that 8-week period starts, it is based on cash out of the bank. So if your payroll period started 2 weeks ago, but you're just paying it now and you've already gotten the money, it's literally based on cash out of the bank in that 8-week period. So you don't have to worry about what pay period something's covering or what the health insurance coverage period is. If you paid for it in that 8-week period, it's going to be one of the costs you can use the PPP funds for. So let's talk a little bit more about that 8-week period. We got a lot of questions about that. It's definitely been a confusing piece of guidance as the PPP loan information has rolled out. We did get some clarification, as Emily noted at the beginning. The guidance and clarifications have been changing literally daily. I wish I was joking about that, but the reality is things have been, the guidance and the clarification have been coming out on a daily basis. So we're doing our best to stay as informed as possible. And so the information that we're giving you today is based on information that literally came out yesterday. So that 8-week period, it does begin as soon as you receive the money into your bank account. So it doesn't matter when you applied for the loan. It doesn't matter when your payroll operations would typically ramp up. If you're a seasonal employee, that 8-week period starts the day that the money is dispersed into your account. So if it was dispersed on April 15th, that means your 8-week period starts April 15th. There is no option to choose a different date. It is just the 8-week period from the date that you get the money into your account. And again, it is on a cash basis. So if you're paying a payroll today that covers a payroll period for the last 2 weeks, that payroll period doesn't matter. It just matters when the money came out of your account. So that, again, that 8-week period starts the day that the money goes into your account. Okay, so a lot of the other questions that we had, and I'm guessing that maybe some more are coming in related to loan forgiveness. As many of you have received funds or applied for the loan already, you know that a big appealing part of this PPP loan was that there is potential for a good portion or all of it to be forgiven. There are a lot of ins and outs as it relates to the forgiveness calculation and what you can and can't use it for. So I want to make sure that we're answering the questions that were submitted and providing some guidance as to what the forgiveness may look like. So as I mentioned before, many banks have actually provided a loan forgiveness calculator. So if you haven't received that from your bank, I would advise that you reach out. Many of the banks had put the loan forgiveness calculator with the loan calculation spreadsheet. So it was one spreadsheet. So if you haven't revisited that loan calculation spreadsheet in a little bit, I would advise going back to the original calculator that your bank had sent you to see if there is a loan forgiveness calculator on there. And that'll give you a good head start in figuring out what portion of the loan may be forgivable. If you haven't received that from your bank, I would advise reaching out to your banker and seeing if they have that available. As I said, we have received a number of calculators from different banks, and I will say that a number of them are different. Not any two are exactly the same. Many of them are similar, but they all have just little different nuances here and there. Probably the biggest nuances are related to the calculation of full-time equivalent employees. So we'll talk a little bit about that too. The big factors that play into the loan forgiveness calculation are the fact that not more than 25% of the loan that you receive can be used for what are called non-payroll costs. And those are the rent and utilities and the interest on mortgage obligations. So if your intent in receiving this loan is to use it just for rent, utilities, and interest on mortgage, then you will not have the entire loan forgiven. So keep that in mind. Again, the purpose of this loan program was to encourage organizations to either retain all of their employees or rehire them back if they have been laid off or furloughed. So you really want to keep that in mind. Forgiveness isn't just based, though, on using the funds 25% for non-payroll and 75% for payroll. There are other factors that come into play. So the two other factors that come into play are that the FTE, the full-time equivalent employee calculation, as well as making sure that the employees that you rehire, or if you've retained your employees and cut their salaries, ensuring that you've brought their salaries back up to what they were prior to cutting them. So the likelihood is your bank is going to ask you for payroll reports, payroll registers by employee that show what the salary or the hourly rate of your employees were, what we're going to call pre-pandemic. So typically that's going to be your January through February payroll registers. And then they're going to ask for payroll registers post-pandemic. They're going to ask for payroll registers during that covered period, but they're also going to ask for payroll registers likely through the end of June. So in all likelihood, a lot of the loan forgiveness calculations are not going to be able to be fully completed until the end of June, and I'll talk about that in just a second. So the idea, again, is that you're retaining or rehiring these employees. You're keeping them on for payroll, even if you are not an essential business and you're closed. It seems counterintuitive, but the idea is that you've got employees that want to be employed and they want to have a job when this is all over. So they're encouraging businesses to keep employees on even if there isn't work to do, which it's hard to wrap your head around, I imagine, as a business owner. Why am I going to pay employees if I don't have anything for them to do? One of the benefits would be if your employees were receiving health insurance benefits, or if you had retirement benefits. If they've been laid off or they're furloughed and they're collecting unemployment, those benefits have gone away for them. So again, the PPP funds can be used to cover some of those benefits for them. And then you can keep them on as employees. They can continue receiving those benefits that they wouldn't otherwise receive if they continued to be laid off. So the whole idea is just to continue encouraging people to keep their employees on, to rehire, to retain, so that people don't lose access to some of these benefits that are tied to their employment. So I wanted to talk a little bit about the full-time equivalent employee requirement. There have been a lot of questions surrounding this because the guidance hasn't been entirely clear. So I'm going to walk through just one very quick example of one of the loan calculators that we did see that I think walked through it pretty clearly in their example. But again, each loan calculator that you get from your bank may be different. So you want to make sure that you're in constant contact with your banker. So this example looked at your monthly average full-time equivalents for the 8-week covered period. So they're going to take a look at those detailed payroll registers to determine what the average was of the full-time equivalent employees you had that you were paying during that 8-week covered period, which again starts the day that the loan funds are dispersed into your account. And then they're also going to look at the average of full-time equivalents for either the period February 15th through June 30th of 2019, or the monthly average of full-time equivalents for the first 2 months of this year. So what they're trying to do is they're trying to gauge what full-time equivalent at full capacity looks like for your organization. So this loan calculator is looking at the lesser of those 2 periods and comparing it to the full-time equivalents you had employed during that 8-week covered period. Then you throw another wrench into it. So if the reduction of employees, let's say you go through that 8-week period. If you get funds today, that means your 8-week period is going to basically go into the first week or so of June, week or 2 of June. What happens if restaurants aren't open back up or your retail business hasn't opened back up yet? So now you maybe made the decision not to rehire all of your employees. So now you're looking at potentially not getting the entire portion of the loan forgiven. Well, the statute and the law and the regulations do have a caveat that if you are able to rehire all of your employees by June 30th of this year, there is potential that you can go back and have the full loan forgiven. So there are a couple of pieces that you have to be thinking about. And it's not cut and dry, but I just wanted to make sure that we talked a little bit about what this full-time equivalent calculation is and what banks are going to be looking at when it comes to the actual loan forgiveness. So we had a couple of questions also related to whether or not you were eligible for the PPP loan if you have laid off your workers and they're currently collecting unemployment. You are eligible for the PPP loan. The eligibility basically states as long as you're a small business, which by SBA standards means you have 500 or less employees. That is also extended if you have a franchise that's listed in the SBA's franchise directory and you have less than 500 employees at each location. With this particular loan program, they will also look at any employers that have a business code that starts with a 72. So that's really going to cover most organizations that are in hospitality or food. And if you have multiple locations and each one has less than 500 employees, you are still eligible for the PPP loan. But if you have already laid off your employees and they're collecting unemployment, you are still eligible to apply. What will factor in is the loan forgiveness. So if you don't hire them all back and they continue to collect unemployment, that will reduce the amount of the forgiveness of the loan forgiveness. So what if your loan isn't forgiven? What happens then? So the loan will only be forgiven if the bank feels you have substantiated the costs you incurred during that 8-week period. Again, substantiation is going to be different based on each bank's requirements. Some of the things I would recommend that you make sure you have in place are invoices related to payments that you made, all of your payroll registers. We've seen a number of banks that are going to be looking for a 941 filing, which is a quarterly tax filing. They also may be looking for your quarterly state unemployment filing. So just make sure that you have anything and everything ready to go for when your bank goes to make the loan forgiveness calculation so that they can have all the complete information. Also make sure that you have bank statements, copies of canceled checks, really just, again, document. The more information you have, the better. So what do you do if your loan isn't forgiven? So if the loan isn't forgiven, it is just that, it's a loan. It is a loan that's at 1% interest. So if you ever wanted to say something was fairly close to free money, 1% interest gets you pretty close to free money. It's not free, but it's quite close. The repayment term is 2 years. So that means from the date of the loan disbursement, you have 2 years to pay it back. There are no prepayment penalties. So if you receive a loan of $100,000 and you only use $50,000 of it, or only $50,000 of it is forgiven, and you didn't use all of the funds, you can essentially give the rest of the money that you didn't use back. You will have accrued very little interest. The interest does begin accruing right away. However, payments are automatically deferred for 6 months. So if you receive if you receive the money, you use most of it, but it's not all forgiven, you don't actually have to start making payments on the loan for 6 months. The interest, again, does begin accruing right away. We had one question that was related to what can you do with the fund? Do you have to use the funds all for the listed eligible costs? Again, to remind everybody, you know, we aren't lawyers. We don't have legal backgrounds. All we can do is go back to what the application states. And there are certain certifications that you make when you apply for this loan. And I'm just going to read off one of the certifications that you do have to initial when you apply for the loan. It states that the funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utility payments as specified under the Paycheck Protection Program rule. I understand that if funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud. So it's always important to read any loan document before you sign it. If you have a lawyer, make sure that they look at the loan documents before you sign anything. Some of the loan documents may have different caveats to them, different language. You always want to go through any legal document with a lawyer if you have one. Certainly review it with your banker. But that is the certification that you made when you applied for the PPP loan. So just keep that in mind. Are there any, Whitney, Dan, Emily, are there any other questions that have come through related specifically to PPP that I can answer before I move on to the economic injury disaster loan?
We did have a couple of questions come in. One is PPP, they're not still deciding. I know with our poll question, we said no, still deciding. They said we are an essential business but working and therefore don't qualify. Is that correct?
So that is not correct. Even if you are considered an essential business and you have all of your employees, you do qualify for the PPP loan. The qualifications are just that you are a small business, you are in operation as of the beginning of this year, and you are one of the few organizations that aren't allowed. Those are things such as illegal businesses. If you do, illegal gambling, you can't apply. But otherwise, you are able to apply for the PPP loan.
Wonderful. Somebody else asked, can businesses pay out all the PPP funds in one payroll, or does it have to go out over the 8 weeks?
If you receive PPP funds and it covers one entire payroll right now, that's totally fine. The likelihood is that you're going to have the likelihood is that you will have the entire loan forgiven because you used it all for payroll costs. And the amount that you get for the loan is based on an average of your payroll from the prior year. So it may be for a lot of organizations, things change substantially this year. So if it happens to be that you get a loan that covers only one payroll as it relates to your payroll right now, that's totally fine.
Wonderful. Can any of this be used for mortgage interest or business loans?
Yep. So to get the full amount of the PPP loan forgiven, you have to try to limit the amount that you spend on the non-payroll costs, which are rent, utilities, and interest on mortgage, to 25% of the amount of the loan you receive. You can use more than 25% of the loan funds that you receive on rent, utilities, or interest on mortgage obligations. Just know that that's going to reduce the amount of the loan that's forgiven.
Perfect. If you use 8% of PPP, I just went away, on payroll and 20% on rent, is the full forgiven or just 80% used on payroll?
Nope, it would be as long as you have substantiated all of the costs that you used it for. Technically, the full amount of the loan should potentially be forgiven.
Wonderful. And we do have a couple other questions, but we can move on to the next topic and go back.
Great. Okay, great. Thanks, Emily.
Mm-hmm.
So the next topic that I wanted to talk about is the economic injury disaster loan. So Emily is going to throw up another quick poll here. related to we call everything's got an acronym nowadays. So we're going to call it the EIDL, the PPP and the EIDL. So if you can, take a look at your screen and go ahead and respond to the poll that's listed there. We're asking if you have applied for the Economic Injury Disaster Loan, or if you've received funds already, or if you're still thinking about it, or maybe you don't know what it is. Obviously, a lot of information has been coming out about the Paycheck Protection Program, and so the Economic Injury Disaster Loan Program was kind of overshadowed in the last 2 weeks, which is why we want to talk about it as an option for businesses. So it looks like most people on the call are still deciding if they want to apply for the Economic Injury Disaster Loan. We've got a couple people that don't know what it is, so that's great. We'll talk a little bit more about it. And about 33% of people have applied but haven't received any funds, and it looks like nobody has applied and received any of the funds. So thank you very much. That helps us a lot. So I'm going to go ahead and start off talking about what is the Economic Injury Disaster Loan. So one of the big differences between the PPP and the EIDL is that the EIDL does not have a loan forgiveness portion. There is a grant portion, which I'll talk about, but the loan itself is not forgivable at all. It is just that alone. The other big difference between these two programs, the PPP, you do have to apply for that loan through an SBA approved lender. So the likelihood is if you've already applied, it's because you had a prior relationship with a bank that was an SBA approved lender. The EIDL, you actually apply through it directly through the SBA. So you don't have to have a relationship with any specific type of bank. This application is done directly through the SBA's website. So you go to sba.gov, follow the links to get to the EIDL, and you'll be able to apply online. It takes about 8 to 10 minutes to fill out the application. It walks you through the process. It's quite simple. I've done it with a number of clients. And it's much more streamlined than it was at the beginning. So the Economic Injury Disaster Loan is actually not a new program. It's something that's been around for a while. In the past, it's been used for mostly related to let's say a natural disaster. Think of something like a Hurricane Katrina, where there was loss of property, a lot of damage involved. And so if there's a federally declared disaster area, the SBA has this loan program that can be rolled out. Because President Trump declared the entire country a federal disaster area as it relates to the pandemic, the Economic Injury Disaster Loan Program was able to be rolled out to the entire country right away. So the Economic Injury Disaster Loan Program, I'm just going to go ahead and call it EIDL from here on out, you have the ability to apply for an up to $2 million loan for for-profit businesses. The interest rate is 3.75%, and the repayment terms are dependent on the size of the loan that you get and your ability to repay it. I've heard that repayment terms can go up to as high as 30 years. So it's not as quick of a turnaround as the PPP where you have to pay it back right away, but it is based on your financial viability. You don't get to choose how much you apply for with the EIDL. So you will have no idea what the amount of the loan is that you're approved for until you've been contacted by a loan officer and submitted additional documents to them. The process to apply right now, there are 5 steps that you walk through on the website. You provide a little bit of information as it relates to your organization, primarily around ownership, listing anybody that is a more than 20% owner. You'll also be required to input your revenues for the period ending January 31st, 2020, or the year ending 2019, and your cost of goods sold. And then the rest of the information is really just about the owner and the organization, having your business's address, your employer identification number, and that ownership. And you submit that application, and a loan officer will be in touch with you for follow-up documentation. For the most part, the likelihood is the follow-up documentation they request may be in the form of tax returns. It may be in the form of your quarterly payroll tax returns, 941s, your annual federal unemployment tax return, your Form 940, some state unemployment quarterly returns. They may ask for an updated income statement or profit and loss statement, a listing of your current expenses. We haven't seen many folks start rolling through the EIDL program yet. In the state of Wisconsin, they have been slow to roll the program out. I do want to make sure that everybody on this call is aware that if you did apply for the EIDL prior to March 30th, you must apply again. So I'm going to say that again, just because I think it's that important. The EIDL program was available prior to March 27th when the CARES Act was signed into place. But when the CARES Act was signed into law, some things changed with the EIDL. So if you applied before March 30th, you must go back on the SBA.gov website and apply again, or you will not end up getting funding at all through this program. Again, the process is really easy to apply. So I recommend if you fall into that category, go back to the website today, fill out the application as it is now, and you'll be back in the queue. One of the things that did come into play as the CARES Act was signed into law was an up to $10,000 grant portion of the EIDL. That was not available prior to the CARES Act being signed into law. So that up to $10,000 grant is available. You have to actually apply for the loan itself. So it's not a separate application to apply for the grant. You apply for the grant as you're applying for the loan. It's the third or fourth step in the application process for the EIDL. It asks if you want to be considered for an up to $10,000 grant, and you can put yes or no. If you put yes, just know that you will be asked to enter in your bank routing and account number so that they can deposit the funds. And the idea is that if you are approved for the grant, you should receive it within 3 days of being approved. We have gotten word that finally, after a number of weeks, we have some clients that are starting to receive the grant money. So that's great news. So again, I would recommend, if you haven't thought about applying for this loan and think this might be a good option for you, please make sure to go and apply right away. The up to $10,000, we now have clarification, is that it's based on the number of employees you have. So you will receive $1,000 per employee up to $10,000. So $10,000 is the maximum amount of grant money you can receive. And this grant truly is a grant. So if you receive up to $10,000 of grant money, even if you don't get approved for the loan, you get to keep that grant money. You don't have to pay it back. The payments for this loan are automatically deferred for 12 months. There is no collateral required if you get a loan of $25,000 or less, and there is no personal guarantee required if you get a loan for $200,000 or less. Again, the maximum loan amount you can get through the EIDL is $2 million. One of the big differences with the EIDL is that it technically is a working capital loan. So where the PPP has very specific instructions on how you can use those funds, the EIDL does not have those restrictions. So you can use it for payroll, you can use it for rent, but you can also use it for supplies costs. You can use it for other operating costs that the PPP program doesn't cover. We had a lot of questions about using the PPP and the EIDL. So Emily, I just want to throw it to you real quick. Are there any other questions specific to the EIDL?
Yeah, just a couple. Is EIDL only for for-profit businesses?
Nope, it actually is for nonprofits, non-for-profits as well. Similar to the PPP, it is for, not similar to the PPP, I'm sorry. It is eligible to most nonprofits. So if you're a C3, a C4, a C5, a C6, that's a huge difference between the two. And also, just a side note, I don't think we mentioned it yet. If you are on the call today and you're a not-for-profit, just want to remind everybody that we do have, we're going to be doing this same Q&A, but specific to not-for-profits tomorrow. So if you didn't see that invite and you're available tomorrow, register for that as well. Otherwise, like Emily said, these will be recorded, so you'll be able to watch them back too.
Yes. Another question about the loan. Do you need to prove economic downturn in your business to apply for this loan?
So a lot of that was a really common question when this started, because for many businesses, they were doing great, up until this hit. So how was it that they were supposed to be able to prove that there was some sort of negative financial impact on them due to the pandemic happening? It will be based on the loan officers determining if you have a need for these loans or not. The likelihood is that you're going to probably need to provide some sort of statement that's showing the economic impact. We've had a lot of clients that had to cancel events that were going to be happening for the rest of this year. We have a lot of business, obviously, that are forced to be closed. So there's likely going to be a point in the application process, not in the initial application. So it won't happen until you're contacted by a loan officer and supporting documentation is requested. But there's going to be a time when you're going to be able to provide a forecast of what that negative economic impact is going to be. Because the reality is, if you were to submit a profit and loss statement or an income statement through, let's say, the end of February, you're really not going to be able to show any negative economic impact at this point. So just know that through the loan process, there's going to be an opportunity for you to submit supporting documents to a loan officer where you'll be able to show what that economic impact will be to your business.
Wonderful. And then last question for this section, other than sitting on the phone for hours, do you have any other way to find out where they are at the SBA process?
So unfortunately, the answer to that is no. I actually sat on a webinar last week with two of the Wisconsin SBA representatives, and they fielded this question. And unfortunately, once the application is submitted through the SBA website, there is not a standard tracking procedure. So if you try to call the SBA customer service or the Wisconsin SBA customer service, they are not going to be able to tell you where your loan is if you haven't heard anything back. So unfortunately, it is just a waiting game. And you will be contacted via email. So if you receive a phone call from somebody, or if somebody sends you an email requesting documents from you that is not through a secure link, just be wary that there are scams out there. They shouldn't contact you via phone. They will contact you via email. And if they request documents from you, it will be through a secure portal.
Perfect. Thank you. That's all for right now.
Okay. So I know we're already at 1:45, and Dan and Whitney have good information for you too, but I just want to make sure that we touch briefly on the use of the two loans together. So that was another question. We got a number of questions about, can I apply for both loans? Can I use funds from both loans? I've applied for one, not sure if I should apply for another. So the basic gist is that you can absolutely, if you qualify, you can apply for both loans. The key is you cannot use those loans for the same things. So obviously the PPP loan, if you are able to apply for it, is going to be the most advantageous for you if you have payroll costs that you need to cover. So if you have applied for the PPP loan and you get it, you can absolutely still apply for the EIDL. You just need to be sure that you use those EIDL funds for something entirely different than what you use the PPP funds for. It's actually similar to any other SBA funded program. If you apply for more than one SBA loan, not in a time of pandemic, you actually can't apply for two SBA loans for the same purpose. So it's the same scenario right now with the PPP and the EIDL. They are both SBA backed loans. You just have to apply for them differently. But you can get the EIDL funds and use them for entirely different purposes. So by all means, if you have a need, you can apply for both. You just cannot use them for the same thing. So again, it goes back to that documentation. Document. If you do choose to apply for both and you receive both, that's going to be a really great reason, again, to segregate those funds. Ideally, you would put those PPP funds into a separate account. This way you can track those separately from everything else you've received, and there's no cause for concern in mixing funds and what you're using them for. It doesn't sound, nobody on this call has gotten the advance or gotten funds. So that's good because there was a provision with the PPP loan where if you had received that up to $10,000 grant, or if you had already received EIDL loan money, that you had to roll that. If you used the EIDL money you received before for payroll costs, you have to roll that into the PPP loan. Or if you had received the $10,000 grant and used it for payroll costs, you had to reduce the amount of your loan forgiveness by that up to $10,000. It doesn't sound like that applies to anybody that's on the phone today, so that makes the calculations a little bit easier. But just know that you can apply for both. You just have to use them for different things. And with that, I think I have covered most, if not all, of the questions that were submitted beforehand and hopefully answered here live. So I will turn it over to Dan to talk about the Families First Coronavirus Response Act.
Great, that was some awesome information and a mouthful of 50 minutes. So thank you for all of your wonderful contributions. Family First Coronavirus Response Act, formerly known as FFCRA. So this was passed in March, and what this really kind of pertains to is paying employees for sick leave. So sick leave falls under a couple different categories. Those categories are either an employee's own care. So if you have a scenario where an employee either has COVID-19 symptoms, they're under a quarantine, or they've been advised by a healthcare professional to self-quarantine due to COVID-19 concerns, they can get 2 weeks of pay at their normal pay rate, and then the employer can get a credit for this. The credit the employer gets has a maximum on it, and that's based upon $511 a day. So if you have an employee that's requesting 2 weeks of leave and they're not over like 130,000+ of wages on an annual basis, they're not going to go above and beyond this credit cap. So employees' own care is kind of one part of this. The second part of this is for care for others. And that care for others component pertains to if an employee is caring for an individual that's subject to a governmental quarantine, or if an employee is caring for a family member. So a prime example of this, it's popped up with a number of clients that I have, has been you've got kids that are out of daycare or kids that are out of school, and you've got nobody to watch for them right now. You're not able to work, so you need to watch your kids. And that's where you would kind of fall under this care for others scenario. So this employee's own care and this care for others scenario, these both cover 2 weeks of time. And then there's also an expansion to the FMLA where you can get another 10 weeks of time. And that other additional 10 weeks only applies if it's for care of a dependent child. So if you're caring for a kid that's out of daycare or out of school and they need full-time care. Kind of another key component to this is that an employee is not able to work or telework. And telework basically means if you have an employee that can work remotely and perform their job duties remotely and still do everything that they would normally do, then they wouldn't qualify for this program. So I'm going to talk a little bit more about kind of the tax credit side of it and how does the tax credit work. So under this program, essentially any wages that you're paying to these employees, you get a credit for. Now there's kind of two different parts of wages that get paid. The first part is if your employee is doing it for their own care. So if they have COVID-19 symptoms, they're self-quarantining for 2 weeks, they get paid at their regular pay, and the max credit you can take is $511 per day. So again, as long as your employees are under $130,000 or so on an annual basis, you're going to get credit for that full amount that you're paying for them. The care for others and this expanded additional 10 weeks for sick leave, that's only a 2/3 pay. And the maximum amount you get on a daily basis is $200 a day. So again, what does that equate to kind of numbers wise? If you have employees that are under roughly mid 70,000s in an annual salary, you're going to get the maximum amount of the credit for those employees. So how does this credit work? I'll kind of provide an example. Let's say Wegner CPAs has this, where we've got a couple employees that are not able to work and they're taking this sick leave on our payroll. So we run a payroll from April 1st to April 15th. They get paid on April 22nd. That's our payroll cycle. We get paid on the 7th and the 22nd. So all of this was enacted on April 1st. So April 1st to April 15th, there's a few employees that qualify for this. They get paid sick pay. Let's say that amount is $2,000 and the payroll tax deposit from this entire payroll is $10,000. Your cost savings is a real-time cost savings. So payroll tax deposit of $10,000, employee sick pay of $2,000, you only make a deposit for $8,000 on your payroll taxes. And what's included in the cost savings are, the gross wages for the employee that you're paying under the sick pay. You also include the health insurance costs the company pays on the employee's behalf. And you include the Medicare costs on the employee's wages that the employer is covering. So these wages are not subject to Social Security on the employer side. So again, to walk through an example, you've got $1,800 of wages that you're paying. You've got, we'll say, $100 of Medicare tax, and you've got $100 of health insurance that the company covered for those employees. That total cost of $2,000. The normal payroll tax deposit is $10,000. You only pay $8,000. So again, there's that real-time cost savings in doing this. So in addition, if you run into a scenario where your total sick pay that you're paying exceeds the amount of your payroll taxes, there is a form you can fill out. Certainly we're happy to kind of help advise on that form if you have questions, but that form is basically a payroll advance form to advance the funds to you from the business. So I will see if there's any questions on FFCRA at this time.
We do have a couple, but just because we're running short on time, we'll follow up on afterwards from our experts here, and we can move on to the next topic.
Yeah.
All right, thank you. I'm going to talk about the employee retention credit, and this is a payroll tax credit and has some similarities to the credits that Dan talked about. From what we know right now, an employer cannot use this credit if they take a PPP loan. So that is a pretty crucial part to this credit opportunity. There are two ways that a business qualifies for this credit. The first way is if the business is under a full or partial shutdown by a government order. The second way a business qualifies is if their receipts have declined by at least 50% over the same quarter in 2019. So you would compare the Q2 of 2020 to Q2 of 2019. And if your receipts have declined by 50%, that makes you eligible for this credit. This credit, you determine qualification then every quarter. And then if it is determined that a business qualifies for a particular quarter, the calculation is based on qualified wages, which does include health benefits. The credit is 50% of qualified wages up to $10,000 of wages per employee. In other words, it's a maximum of $5,000 of credit per employee for the year. Qualified wages does mean something different depending on the number of employees you have. So if you have under 100 employees, all wages are considered qualified. So whether people are working or not, the wages that you pay are considered qualified. If an employer has more than 100 employees, then qualified wages is only wages to employees who are not working. So employees who are furloughed or facing reduced hours. The credit offsets the employer's portion of Social Security taxes. And then kind of similar to what Dan just mentioned, if the credit exceeds the employer's portion of Social Security taxes, the remaining amount is refundable and through that 7200 form. And similar to those credits, you can reduce your payroll tax deposits for the amount of the credit to assist with cash flow immediately. Just a couple other things to note about the credit. It cannot be used for the same wages that Dan talked about under the Families First credits, or the same wages where you may take the work opportunity tax credit. And I just want to emphasize again that the credit cannot be used if your business took a PPP loan. That's what we know right now. I will have a detailed article coming out here shortly too that we'll go through some examples. That's all I have. Thank you.
Perfect. Did anybody else have anything else to add? I know we're coming up on our last couple minutes of the presentation.
I've got a couple things to kind of add. So there's been some questions too about the taxability of these programs, and the FFCRA credits for the sick pay. Those credits that you receive are taxable, so that does add to your taxable income. And as of what we know right now with the PPP loans, those funds that are forgiven are not taxable to the business. So that's been a really nice advantage of this program, is that these funds are not taxable. And one other item, just to comment, we've had a number of clients who may either have a self-rental where they own a business and the building, so they pay rent to themselves, and that rent expense would qualify under the PPP loan funds. And in addition, we've had some landlords kind of reach out to us and say, you know, I have commercial tenants. I'm worried about them being able to pay their rent. What can I do? In situations, they could apply for the EIDL, and then also certainly encourage their tenants to apply for the PPP. And if their tenants have received the PPP funds, encourage their tenants to use those funds to pay rent to them so they can still collect on their rent.
Wonderful. Any other last comments from our panelists?
I did just want to mention I've been trying to answer some of the questions directly that were in the Q&A. Look in there, and I know we'll be able to send answers back to people too. But I did just want to mention we didn't get a chance. Obviously, a lot of topics to cover in a short period of time, and we didn't really get a chance to talk about how some of this impacts those that are self-employed. If you file like a Schedule C, or if you're a partnership. There was guidance that actually just came out literally yesterday. So self-employed Schedule C filers do qualify for PPP and EIDL loan funding, but the calculation is a little bit different. So obviously not enough time to go into a lot of detail. I guess I would advise, please reach out to us here at Wegner, and we can talk to you a little bit more about that. We have a lot of clients that are Schedule C filers. Some may be on the call today. So please reach out to us and we can give you a little bit more information. And please remember that I've got up on the screen too links to some great resources. We do have our Wegner COVID Resource Center, and we try to keep that updated when new information comes out. So we will be posting the guidance as it relates to applying for the PPP loan as a self-employed individual. So be sure to look there hopefully in the next hour or two. So.
Awesome, thank you. And just so everybody knows, on this presentation, you will receive this short little presentation PowerPoint, so you can have these links. And then the last slide is also all of our wonderful presenters' contact information, so feel free to reach out to them. Everybody who did submit questions, we will be following up in the next couple of days to make sure that you get answers to those. Sorry we ran out of time. It's a really complex topic, but we are so appreciative of everything that you guys went over, and hopefully we answered a lot of your questions. So thank you everybody who joined us today. We do have a lot more upcoming webinars, and tomorrow we're doing the same thing focused on not-for-profit. So feel free to join us if you have more questions that apply to that. So thank you again, and have a wonderful rest of your day.
Thanks, Emily. Bye.
Yeah, thank you everybody.
Thank you.
Thank you.